Hey loan officers, DJ Christofferson here. If you don't know me, I've been a licensed loan officer since the end of 2009. I've been a top 0.5% producer in the country. I've helped grow and scale a mortgage company by multiple billions in annual volume. I've coached hundreds of loan officers across the country build their businesses, and my focus today is to help loan officers build mortgage careers that they love. A lot of loan officers go from company to company to company, yet they always experience the exact same thing and they have regret. And why is that? It's because they look for companies that are more similar to what they are already experienced. Why? Is because it's comfortable. Instead, if you are going to consider a different company, you need to be very specific on what you are looking for, even if that means it gets you out of your comfort zone. So if you're going to make a move to a different company, do not make a lateral move. Do not make a move to a company that's already similar. And so there are 5 things that you should be looking for. And the first one is great interest rates. You know, every company says they have fantastic interest rates. And if you look at one company, they show you the recruiter rate. When I say the recruiter rate, they make their interest rates look better for you. But that is deceptive. Instead, you want to go to a company that is transparent with their interest rates. And there's nobody more transparent than NEXA lending. Let me give you an example. We have 2 paths that our loan officers can do their loans at. They can do it on the broker path, or they can do it on our warehouse line. Both paths, you get to see on every single deal the exact margin that was made. Nothing is hidden from you. And we as a company, we make so little, sometimes nothing on a loan. We pay 100% of it. You're guaranteed to have access to the lowest rates in the industry. So if you're going to make a move to a company, interest rates matter. Don't fall into this trap of saying, branch managers tell you, hey, sell service, don't sell rates. You can sell both service and interest rates. So if you wanted a competitive advantage, make sure you start with the most important thing, great interest rates. The second big thing is, yes, it's great to have low interest rates, but if it means you have low compensation, you don't want that. Why? Is because you're gonna have to work twice as hard, 3 times as hard just to make good money. I know, because that's what I was doing at the company I was at before I came to NEXA Lending. So you want a company that also has high compensation. Now, the question a lot of loan officers will say is, well, how can you have low interest rates and high compensation? It's actually very, very simple. It's very easy. The company has to make very little on the loans. And that's what we do here at NEXA Lending. We have a model where we make a little on a lot of volume. We pay our loan officers up to 100% of the revenue generated on the loan. So with our company, you will have access to the lowest interest rates in the industry, while at the exact same time have the absolute highest compensation in the industry. The third thing I want to talk about is find a company that allows you to have business freedom. And what do I mean about that? Well, there's a variety of different things. Let's see if I can hit them very quickly. One is they don't get in the way of you building your business your way, with your branding, your voice, the way that you want to build your business with your team. Another thing that matters is that every loan officer has different ideas on what kind of niches they want to go after. The problem is most companies are very limited in scope on what they make available for their loan officers to sell. They might say things in theory that they have, but their options are so limited. For instance, at NEXA Lending, I know loan officers that they focus very heavily on VA manual underwrites, and they crush it, making $30,000, $40,000 a month on VA manual underwrites. I know other loan officers that are closing 30, 40 loans a month with investor DSCR loans. Other loan officers are killing it with commercial loans. Then we have other loan officers making 500, 600, 700 basis points on reverse mortgages. Now, you might not be interested in any of those particular products, but the point is that you want to go to a company that's not going to get in the way of your growth, but is going to create the environment for you to build your business your way and have that freedom that you have always desired for your goals and your business. A fourth really big thing is that you want a company that has a long game plan for a vision and not short-term vision. Short-term vision causes companies to go out of business. You look at all those companies that went really hard after refinances dried up for how many years? They're out of business. The other companies that are going hard after the trigger leads, they're going out of business once those go through, right? Unless they really pivot. And so you need a company that has great vision. And one of the things for us is that, well, our loan officers are always going to be at a great advantage because we have the lowest interest rates, the highest compensation, more products than anybody else, but also we are investing heavily into technology. There is nobody on our side of the business that is investing as heavily into AI, and there are things that are on the horizon that I'm not at liberty to share yet that are coming that are completely transform the way that you do business, so you can survive and thrive when other loan officers are looking for new jobs. And let me give you one more thing. I could add several more, but let's focus on one more thing, and that is a producer-minded leadership. Now, I know a lot of loan officers have some strong opinions of our CEO, Mike Cordes, and you may too. But the one thing I would say about him, he has a producer's mindset. He has a loan officer-centric mindset, and everything he does is try to set up our loan officers for the greatest amount of success. That's why we have grown rapidly and why we are not letting go, and we are putting our foot on the gas to go forward. And everything that we do, we've had 12 compensation changes since I've been at NEXA Mortgage. All 12 of them have been for the betterment of the loan officer. What company have you talked to that has had 12 compensation changes and every single one of them has been an improvement for the loan officers? We do that kind of things here at NEXA Lending because we are a loan officer first company. We are a producer driven company. So if you're a producing loan officer and some of these 5 things, or hopefully all 5 things resonated with you, I want to set up a time and speak with you. So in the description, there's going to be a link to request a time or set up a time to talk with me, and click that, fill that information out. My team's going to reach out to you and is going to schedule a one-on-one Zoom with me. So I appreciate you listening today. Hope you have yourself a great rest of your day.